Apartment fundamentals continue to look pretty underwhelming in Columbia, South Carolina, but that's not to say there aren't some bright spots in the South Carolina state capital. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Columbia update. The Carolinas have been home to some of the nation's hottest apartment markets over the past few years thanks to strong demand and great demographics. While the region overall has cooled down of late, that has more to do with a big ramp up in supply than anything to do with any kind of slowdown in demand. But one of the markets that just hasn't seen that big run up is Columbia, South Carolina. Starting with the occupancy stats, you can see vacancies remain a persistent nag on the market here. Occupancy has averaged around 92% over the past couple of years, registering at 92.7% as of Q3 13. And it was disappointing that we didn't see any kind of a bump in Q3. Occupancy was flat in the quarter, even though Q3 is when students return for the fall semester at the University of South Carolina, which obviously is a big part of the market here. And let's show you real quick how that compares to other markets in the Carolinas, and you can see it is the worst. The other markets have done much, much better and all have occupancy right now around 95% or higher. So as you might expect, rent growth in Columbia hasn't been all that great. Columbia notched 2.4% year-over-year rent growth as of Q3, and this market has seen a good bit of fluctuation in rents over the past couple of years, as you can see from the chart, and that's pretty typical for a market still wrestling with vacancies. But there are clear winners and losers in Columbia, and a clear bright spot is the core submarket, Central Columbia University. Rents jumped 7.1% year over year, way above everywhere else. And that's really been good to see because vacancies haven't been an issue in that central submarket for quite a while now, but we really haven't seen much rent growth until recently. Meanwhile, you see rent hikes of around 3% in Dutch Fork and in Lexington County, despite plenty of vacancies in both submarkets. So the real weak spot for rent growth is East Columbia, where rents were up just 0.3% on an annual basis. But this is what separates Columbia from some of the other markets in the Carolinas. Whereas we've seen pretty universal strength across submarkets and other markets in North and South Carolina, in Columbia, it's still spotty. So going forward, we expect that to remain the case for Columbia. The downtown university area should continue to thrive, but the other spots will likely continue to see some challenges, even with the absence of much new supply, and that's just due to the strong preference for single-family homes in some of these other submarkets, and also due to the lack of a robust local economy. Stable, but certainly not robust. And that wraps us up for Columbia, so until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.